morning, good morning, good morning, everybody. It is January 2, 5:43 a.m. on the East Coast. Happy New Year. Hope you all are safe. Very sad to see some of the events that took place, New Orleans especially, but, you know, welcome to America. Never changed. So, futures are up significantly. Dow futures are up 200. The NASDAQ futures are up 167, nearing in on plus 1%. But more importantly, because it's what we focus on as the SPX, is the ES is up 36.5 points, up 0.61%. And we are coming close, very close right now, to that 59.31 area, which we have been concentrating on for quite a few days now. We're at 59.22 for 80. We were up as high, I don't need to scroll on this, we're up to 59.24.90, so 59.25. So all of you who last night got in either the 58.75, 58.80 puts, well, let's just say it's easy money for you. The later on, around 9 p.m. last night, when I threw out there that you could get $354 risk credit up there on the 59.25, 59.30s, they're down to $2. So you could take your 200% money and forget about it and not have to do anything, or you could go and take your chances because we had 4 red closes in a row. You don't see that. If you see it, but you need to wait and wait and wait and wait and wait all year long in order to be able to see that. Well, we got 4 red closes in a row. The only thing they need to do today, that's it, is close above 58.82. That's it. That eliminates that trend. So thinking that we are getting a big bounce and going significantly up, well, 59.40, right where our problem is plus 1%. And guess what? I'll share this with you a little bit more on the weekend, but we had 22 plus 1% days out of the 252 trading sessions last year. We had 22 minus 1% days. So anybody that wants to argue about it being bullish, bearish, well, 22 and 22. So anyway, seeing that you have had a very low streak of getting plus 1%, be very cautious about thinking that you are going to be getting 59.40 despite having your big gap there up above. So I'll bring you on here really quick as to what we're talking about. We are here looking just at a 3-day chart so that you can see where the 20-day moving average is up above that second gap up there, up at 6,006, 6,037. The gap that we're concentrated on, if we are going to be concentrating on any kind of upside gap whatsoever, is going to be this one here, 59.41, 59.71. 59.40 is where we were going to on, what was that, Friday, Monday? Dead, end of the story. Tuesday morning, all that we could get to was that 59.30, 59.31 area, and we failed and just faded off for the rest of the day. 59.41, 59.71, I would caution you very, very much about getting aggressively bullish about this. However, any 15-year-old who took, a 10-minute charting class can say, okay, here, double bottom, inverted head and shoulder, 59.70 is coming. Well, that's what your concentration and your focus is going to continue to be. Is this 59.41, 59.70 up here? Don't get caught with your pants down. The VIX, nothing whatsoever on the VIX. Nothing. The VIX is hanging right here at 1744. Not saying you're not going to get down there to 1622 so that you can get that move on the SPX up into 5940, 5970, but you are getting nothing out of the VIX because it ain't going to be that kind of a year like you had last year. Over here on the QQQ, looking at it and continuing to stay bearish, having hit the 50-day moving average down there on Tuesday, getting a little bit of a bounce up here this morning. Your close 511.23 will be your gap to be filled. Haven't drawn it yet. But we are looking again at that 516 being the problem zone right there, that 516 area where we are getting really close to. So be careful about how bullish you decide that you want to be. Over on the IWM, big, broad, wider view, because big, broad, wider view, the IWM is in a terrible place And with the junk bonds having peaked higher than they had been all through 2020, you got some big problems over there. The Dow Jones not looking nice whatsoever. Again, not expecting anything aggressive coming out of any of this to the upside as we begin the new year. US dollar, Japanese yen holding up here at that 157.70. For now, holding, not doing anything significant. So again, having a special day. However, here you are on your Dixie, with your Dixie being up to November 2022 high levels. Haven't been up here since then. Got to zoom out a little bit more. 2 years. Which, if you remember, back in November when they were talking about rate cuts. This is how we sunk down into the bottom of Israel invading Gaza, and then the big sell-off down there as they started talking about rate cuts. So here you are. You're still getting your breakout on the Dixie. I caution you about going out there and getting large. And again, bigger, broader, wider view. With the inverted yield curve having uninverted, and it has never, ever failed. Just because you are going to be getting a little bit of a relief bounce on any of your bond indicators, I again suggest that you be very, very careful. Looking up here right now, we're right around this 59.25, 59.30 area, 59.35, 59.40, 50-day moving average being right there on the SPX. Sure, why not? Have that idea in mind at that 59.40, 59.70 for when you want to get short again, and over on the QQQ, because we have crushed it not once but twice on those March, January, February puts. We'll be looking once again to be getting back into the QQQ puts for March. However, for those of you that want to do the Januaries or Februaries, by all means, feel free. The email's gone out twice. I'll send it out again when it's appropriate here. I forgot to turn Tick Strike off, so it's making a little bit of noise as we are a little bit of a peak right here where we're at. But today for news, we've got nothing. Jobless claims, doesn't matter. First day back after a major hangover weekend. Not expecting anything whatsoever to the aggressive side. So enjoy yourself as we are here. 59.21 up 40 points with a big fat gap to get filled down below, down to 58.80 to focus on 56.50 later this month.
Do nothing. I beg your pardon?
You have no move, Mr. Thompson. You do nothing.
He's under attack, Arnold.
There's all the more reason for patience. I've made my living, Mr. Thompson, in large part as a gambler. Some days I make 20 bets. Some days I make none. There are weeks, sometimes months, in fact, when I don't make a bet at all because there simply is no play. So I wait, plan, marshal my resources. And when I finally see an opportunity, and there is a bet to make, I bet it all.